Today in crypto. Bitcoin miner Bit Digital passes $1 billion market cap. The company had a total value of $6.2 million a year ago. Badger DAO founder Chris Spadafora on bringing a long-awaited product to market and building for the future. The launch of Badger DAO's DIG, a synthetic rebasing asset meant to track the price of Bitcoin, is one of the most eagerly anticipated product releases in recent DeFi memory. But the person most excited to see DIG hit the market might not be a trader, but instead Badger DAO founder Chris Spadafora himself, according to community-minded Spadafora, who would be quick to note that he doesn't care for the founder label despite its technical truth. Anticipation for the launch has led to more than one badgering inquiry directed at him on Twitter. You've probably seen it. When $dig, it's constant, Spadafora sighed for all the excitement. However, the exact date of the launch is still unknown. In an interview with Cointelegraph Tuesday, January 5, Spadafora said DIG was set for release within a few days. However, on a Friday community call, he pushed the timeline back, saying users could expect DIG sometime next week, a series of delays that have only stoked the Twitter crowd's passions. When $dig, when $clause, so many questions. We need answers. When? Still, Spadafora has largely remained good-humored about the badgering, as he knows that it's rooted in an eager community ready to play the latest algorithmic asset game. He's also excited about the launch for another reason. However, he believes that when all of the forthcoming stabilization mechanisms are ready, DIG could become more than just another spin at the Rebus casino, and it might even evolve into a true synthetic Bitcoin asset. It's a difficult goal to reach. So far, algorithmic assets such as algorithmic stablecoins have proven to be great ways for savvy game theoreticians to enrich themselves, but inefficient when it comes to keeping their intended pegs. To this end, Spadafora and the rest of the team have taken inspiration from previous rebasing experiments such as Amplify. We think the secret sauce is learning from what AMPL did around liquidity, and then adding the automated vaults on top, said Spadafora. Amplify's model is a time-tested one, at least by DeFi standards, which has undergone over 600 rebuses to date. Its success was markedly accelerated once they developed the geyser in which users could deposit their AMPL to a liquidity pool in order to earn additional token yield. The addition of vaults on top of that is a novel move, however, which may yield benefits for the stability of the peg as well as users. What we want to do with our vault system is really at large scale be the, let's call it the buy and sell dictators. So through automated strategies we're able to buy when the time is right and sell when the time is right to optimize return for the users. Effectively, a DIG vault would automatically and programmatically play the token economic games other algorithmic asset projects expect users to play with bonds or coupons. Currently Badger's vaults are worth $700 million, a massive pool of automated yield-generating liquidity that could be brought to bear to keep DIG's price tied to BTC. Spadafora told Cointelegraph that the DIG vaults and their strategies would ideally launch a few weeks after the DIG token launch, and that additional stabilization measures, such as vault rewards that fluctuate depending on how close DIG is to the peg, are also in the works. In the end, however, the best resource Badger DAO might bring to the stabilization effort is the community itself. Spadafora said that the DAO will have the power to tweak mechanics such as rebus time, or to even develop an entirely different model for the token if the plans the team brings to the table aren't working. Such community-run operational efforts have proved successful with projects like Synthetix. Still, even if DIG manages to properly track the price of Bitcoin, it's an open question as to how much market appetite there is for more Bitcoin on Ethereum. BTC on ETH has topped out in recent weeks, stalling below 150,000 total BTC after a parabolic advance throughout most of 2020. The DIG launch is expected to bring an eventual total of 4,000 BTC to the market, though according to Spadafora only 15% of the supply will be available on day one. Roughly 580 tokens, half will be allocated to the Badger treasury, and another 30% will come onto the market in a liquidity mining event over a multi-week period. But does anyone even want another source of Bitcoin on Ethereum? Spadafora thinks so. He thinks of Bitcoin as the ultimate collateral, and says that one long-term goal is for Badger to flip the stack, instead of Badger being the endpoint in a cycle of smart contract transactions. Wrap BTC, pool WBTC with Ethereum, deposit pool tokens into Badger for yield. It would become more of a base layer. When groups like us are able to say, oh, you can unlock this illiquid position, and borrow against it so you can go and take additional strategies, lever up and buy more Bitcoin. Provide that stable coin as liquidity somewhere, or just reinvest that into our vaults and increase your APY in the Badger wrap. That's where it gets interesting. One way they will accomplish this will be by allowing users to borrow assets against staked liquidity pool and vault positions, likely with a stable coin called $Claw, Badger Dollars. As a result, already a few clever Badger DAO fans are looking past dig into the potential of taking out stable coins against their position-locked big vaults. The question for them now is when Claw. Bringing all these new products to the DeFi ecosystem is a developmental load, but Spotify says that the responsibility of nearly $1 billion in total value locked is what weighs on him more than the exhaustion. This last 5 weeks have probably been the most stressful 5 weeks of my life, he admitted. After all, it's difficult to sleep when you don't know what you don't know and you're building a wildly successful project in a space rife with hacks, exploits, and vulnerabilities. Additionally, complexity inherent in Badger's interacting systems, farms, vaults, a rebasing token, liquidity pools, etc., provide layers upon layers of smart contract risk. To that end, the Badger DAO team is leading the way with a variety of security processes that Spotify thinks will become the standard. First, Spotify says that the team conducted what he calls a non-smart contract security audit. This includes internal policies regarding how developers handle updates, make changes to the web app user interface, and mitigate things like spear phishing attacks. But the most important development coming is the Badger War Room. Many of the recent exploits over the past few months have seen the same half-dozen to a dozen white hat hackers convene to try and replicate, then mitigate, recent contract exploits. The War Room aims to have that ad hoc group in place from the start, featuring a contract management and contract repository system making it easier to untangle possible exploits. Additionally, Spotify says the team has onboarded all War Room participants to Badger systems, pre-built a test environment, and established multiple communication channels and a schedule for who would be awake and available to respond to an attack. It's a system designed with the reality in mind that it's impossible to predict where the next exploit might come from, but constructed to better analyze and potentially reduce the harm such an exploit might cause. Considering the project has been live for barely more than a month, the progress is remarkable. In the end, though, Spotify hopes it all might help create a new, sustainable niche in DeFi. Every Friday, Lottie Coded delivers analysis on the week's critical stories in the realms of policy, regulation and law. Editor's note. January takes its name from Janus, the god of transitions and the guardian or the gates of Rome, looking always forward and backwards. Finken's comment period ends. Twilight of the acting controller. Protectionism and payments. Further reads. Continue reading on Cointelegraph. Bitcoin, BTC, again rose to a new all-time high on Friday as bulls continued to buy on every minor dip. As the price reached a new high, Bitcoin's market capitalization soared above $775 billion, taking it past Facebook's market cap. According to the website Company's Market Cap, this means there are only 6 companies in the world that currently have a greater market cap than Bitcoin. The pace of the rally seems to have caught several traders off guard. Popular analyst FlibFlib told Cointelegraph that the sustained rise points to accumulation algorithms and that accumulation algorithms seldom care about the price when their goal is to invest X dollar in Y time period. Continue reading on Cointelegraph. Crypto long short, traditional and crypto markets are starting to converge. The latest OCC statement, which opens the door for banks to use blockchains to validate payments, hints at more than just better services. Hit the like button and subscribe to the channel.